After forming a base since July, Netflix looks set to once again retest the stubborn $550 resistance level that has acted as the summit of a long sideways trading channel. So what can power Netflix through 550? How far can the stock travel if it does break out? And dare I say, what will happen if it fails at 550 for a fourth time? Hey everybody, my name's Connor and welcome to my channel Trading Places. My aim is to help you take advantage of the stock market so your money can work for you so you don't have to. Today we're going to discuss whether the stock of Netflix could one day be worth $1 trillion. So starting with the bull case for Netflix then, let's look at their earnings growth. Netflix's income is growing faster than all other members of the FAANG group, which comprises of Facebook, Amazon, Apple and Google. And I say that because these are other comparably large market cap tech stocks and therefore quite good companies to compare Netflix with. Secondly, it looks like Netflix has real pricing power. Netflix has increased the price of their memberships 4 times in the last 5 years, and now with almost 200 million users, every time Netflix raises the subscription price by $1, the company will add an extra $2.4 billion per year in revenue. That's 10% revenue growth without accounting for the millions of new subscribers that they continue to attract. A third reason why Netflix should continue to grow is their international growth. As US subscribers begin to plateau, Netflix has begun attracting customers across South America, Europe and Asia at a rate reminiscent of the early days. In fact, India is likely going to be a key market for Netflix, with the Indian streaming market projected to be the fastest growing in the world, and it's exciting to see that Netflix is doing a great job in this market. This year, Netflix grew subscribers in the region by 200%, they doubled their revenue, and despite heavy investments, they did manage to grow local earnings by 73%. So markets like this will continue to fuel Netflix's growth for many years to come. The fourth and perhaps most important reason behind why I think Netflix could be worth $1 trillion are their future income streams. For some time, investors have wondered how Netflix would address its crazy cash burn rate. How could Netflix become profitable enough to warrant such a high market cap when year after year their content spending continued to outpace earnings? To be fair, Netflix has eased these fears by flexing its pricing power over the past couple of years. However, there is a theory that Netflix plans to one day become one of the world's largest data aggregation companies. Remember, first and foremost, Netflix is a tech company with excellent AI capabilities. Therefore, the company could easily begin to monetize the huge amount of user activity and viewing data that they collect daily from their 200 million customers. Not only does Netflix know your age, sex and nationality, they also know what you like to watch when you watch it, pinpoint moments where you switch off a show, and lots of other key information that is worth a fortune to movie studios, marketing companies and advertisers. So that's quite a compelling bull case for Netflix. However, let's talk a little bit about my concerns for the stock. Firstly, let's take a look at the valuation. Based on various metrics, including price to sales, forward price to earnings, free cash flow, and PEG, which stands for price to earnings growth, Netflix is overpriced versus other members of the FAANG group. Secondly, and perhaps more of a near-term problem, is the tough resistance that the stock is experiencing. As Netflix approaches $5.50 per share, the stock is at risk of forming a quadruple top. Over the past 6 months, Netflix has suffered 3 serious declines of 15% upon reaching this level. And if the stock begins to slow down as it reaches its level for a fourth time, investors may panic and spark another big sell-off. If this occurs, then you can expect Netflix to drop like a hot potato straight to 500 and potentially break down further to around 475. My only other concern for Netflix is their competition. Right now, you've got the likes of Disney, Apple, Amazon and Google all going after Netflix's streaming crown. Yes, the video stream market seems like one of the safest long-term trends out there. However, Netflix finally has company in the shape of 4 aggressive giants who don't like sharing. If Netflix had found itself in this war 3 years ago, I think investors would be running scared. However, Netflix has used their first mover advantage well to grow rapidly into a worthy competitor to anybody. In summary then, it's been a pretty easy game trading Netflix stock for the past 6 months. You simply buy near 475 and sell near 550. One of these levels has to break sooner or later, and when it does, Netflix will have a huge breakout or breakdown. Right now, the proverbial Netflix tennis ball is on its way to 550, and if it's not returned, I think we could see a 20% jump in the stock price. And that could just be the start, as I believe Netflix has the potential to one day reach a $1 trillion valuation, and why not? Stranger things have happened. Before you go, please click the like button. It takes literally a second, whereas this video, I'll be honest, took a hell of a lot longer than that. I hope you enjoyed the video. Please stay tuned for more uploads and check out my website tradingplaces.com for a load of free trading ideas. And remember that your money should be working for you and not the other way around.